Hello everyone, welcome back again. Today, um, we're gonna talk about market trend. Okay, because anytime you open your chart, first thing you have to look out for is what is happening in the market. Because when you talk about forex market, then you talk about market trend. And in market trend, we have two types of trend. We have two types of market. In fact, it's neither the market is trending or the market is consolidating. Okay. Now let me just give you a clear picture of what I'm talking about. Okay. In a trending market, you will see something like this. Okay. Sorry about my drawing. All right. When you see something like this, it means that this is an uptrend. When you talk about trend, it's neither that the market is trending up or the market is trending down. That is two types of trend, and there's no way about it. Then, if the market is trending down, it will be the opposite. Something like this. I don't really know how to draw. Okay. Okay. This is a downtrend because the market is going down. All right. And this is a market uptrend because the market is going up. All right. Then, in other words, we have another trend. We have another market structure that is not even an uptrend and not even a downtrend. And most of the time, you try to avoid any market that is not trending, and it's called consolidating market. Consolidating is you will see something like this. You will see something like this. It's not going up and it's not going down. It's just going up and down, consolidating in the same zone. All right? This is consolidating. This is a downtrend and this is an uptrend. This is the three types of market trend. All right. Then, when you want to trade a trending market, all right? Let's say, for instance, this uptrend. Let me just use this uptrend as an example. I'm not good in drawing, sorry, but this is just textbook example. In your chart, it will look completely different, but if you have the knowledge to apply what I'm telling you now, you can trade the forex market. So now, when the market is like this, okay, it means this one now, this is what they call, this movement is what they call impulsive movement. And this movement here is what they call correctional. We call it correctional movement. This is an impulsive. This is correctional. This is an impulsive. This is correctional. This is an impulsive. This is correctional. Impulsive, correctional. Impulsive, correctional. The same thing with when it's going down. Okay? This is just like someone who is selling something in the shop. Okay, when when the goods is too high, you give a discount in order to attract customers. Then once the customers are there and they are willing to buy the market, now they hike the price again. Once it's too much for them to buy, the price will discount. But it must not come to this price here, because what you are looking at here, all these things you are looking at is prices in the currency, prices in the financial market. So this price here must not come to break this one. Instead, it will break this up. Okay? This is what they call higher high. Like for instance, now this is a low. Okay, the next low we have is higher low, and the next high we have is higher high. Now we have another higher high here. We have another higher low. We have another higher high. We have another higher low because this is a low, but the low will be higher than this one. This is typical example of an uptrend. Then, anytime the market is going like this, and at a point, this market come down and break this low. Okay, this is a higher low. You can see this low is higher than this one. This one 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 is higher than this one. So now you are as an up for the market to continue to be in an uptrend, it must not break this low. It will always be higher high, higher low, higher high, higher low. It will keep breaking the highs, breaking the highs. But anytime that market come and break the low here, just know that something is about to change. You will see something like this. The market will come and break this low and come down here and now start going like this, start going down. Because of what? Because it has already breaking the low. So the law of an uptrend is breaking the high and never the low. Once it breaks the high, that is considered an abomination. The market will change direction immediately. Okay? And in the forex market, you have to know when the market is about to reverse. Okay? Now, there are so many reversal patterns in the forex market that anytime you spot something like that, you will know that yes, this price is about to change direction. Let's say, for instance, give me 1 minute. Let's say, for instance, this market was going high, okay? Higher high, higher low, higher high, higher low, higher high, higher low. At a point, it makes equal high. Instead of having a higher high, it makes equal high. This high did not break this one. Instead, the both of them are equal. Just know that the trend is about to change. Now, once you see something like that, it is called double top. And if it's in an uptrend, if it is in a downtrend, sorry, you see something like this. At a point, you will see something like this. This is double bottom. This is double top. This is double bottom. All right. So once you see something like that in the financial market, just pause a minute, pause and monitor the market. What is the market trying to do? Try to figure out what it's trying to do. Now, once you see this double top, you have to put line here because this is what? This is neckline. When you talk about double top, this place here, this recent low, because this is the recent low, okay? This recent low becomes the neckline. It is called neckline in the forex market. Now, you wait for the neckline to break because neckline is support. This is a resistance. I will still tell you what is support and resistance also. This is a resistance. Okay? No, sorry, this is support and this is a resistance. Once it comes to break this neckline, once it breaks it, you wait for a pullback and you start selling the market. The market will start going down. Because of what? Because it has broken this recent low and it failed to break the top that resulted to double top. Okay? Then in the forex market also, we have what they call support and resistance. Whenever you open your charts, whenever you open your chart, just pay close attention. Pay a very close attention to your chart and know Where is the area of value? When you talk about area of value, we talk about point of interest, support and resistance. All right? So now, when you look at your chart and you see something like this, I don't know how to draw, so you have to manage it. So when you see something like this, all right, once you see any chart like this, look at the chart very, very well and try to know what is happening in the market. See, in this forex market, we have support and we have resistance. And anytime resistance break, it becomes support. And anytime the support breaks, it becomes resistance. I will give you an example with this my drawing right now. All right, look at this place now. Look at this area. This area is area of value. Do you know why? Because multiple times price comes to that level and tank down. Price comes to that level and tank down. Now, this once the market is here, this place is a resistance. All right, and this place here is a support. All right, so once market comes here, you watch out for what is really happening in the market. What is the price trying to do? Once you see any sign of price reversal, you buy the market in order to ride it up, because this is at area of value. This place you are seeing is area of value. This place is an area of value. This place is an area of value. This place is an area of value. All right, that is where your attention have to be all the time. You have to be paying close attention at those areas. Anytime price comes there, you watch out for what price is trying to do and take action. All right, so now once price is here, okay, this place, like I told you before, is resistance. This area here is resistance. Now price come and break it. Immediately price break this resistance you are seeing becomes a support. Let me give you a clear example. Let's say that this is an upstairs, okay, this is a ground floor, okay, this is a ground floor here. All right, this area is a ground floor. All right, then you use something and break here. You break into the first floor. This is the first floor. This is ground floor. You break the first floor. What happens? This place becomes your floor, not this place anymore. Okay, this place was your floor before. Once you break here, this place becomes your floor. All right, and now another one here. Once you break it, this place becomes your floor. So anytime you come here, you bounce back. So you have to watch out for price. Anytime price come here, as long as price come and break this place, anytime it comes here, you watch out for a reversal and you ride the market up. The same thing with when market breaks here and it comes here and go up, comes back again and go up. Now it came back again and break it. Once it comes back again, it will bounce back. But you have to watch out and know what the price is trying to do. So whenever you look at your chart, you map out your support and resistance, which is your area of value, where your point of interest is, where you are looking at in order to enter the market. You cannot just come here and enter the market. No, you can't come here and enter the market. You have to wait for the market to get to the area of value. Then you know what it's trying to do. Once you see bearish engulfing candle I told you about candle before. Once you see a bearish engulfing candle that shows that yes, sellers have stepped into the market, you sell the market and write it down. Now, the same thing with this place. Once it broke this place, you know that yes, buyers are strong. You just buy your market and put your stop loss below here. And that is all. You ride your market up and make your profit. That is what support and resistance. Some people can call it supply and demand. It doesn't matter. What matters is you understand what the chart is saying. If you pay attention to all the grammatical, expression in the financial market, you can never trade the forex market. The only thing you need is to understand what the price is doing. Understand the price. All right. Now, another thing is trend line. I'm supposed to talk about trend line before I even talk about support and resistance, but it's not late. Trend line can also serve as support and resistance. They are all doing the same job. So you can mash all of them together and smash the financial market. You kill the market and make your money. So now I'm going to give you an example of trend line and what trend line. All these things you are seeing is where people, the big boys, the financial institutions are looking at in order for them to enter the market. So once you see any sign that yes, the big boys has entered the market and they want to move the market, you join them. That's what I was telling you the other time. You join them, and as they are making profit, you're also making profit. You understand? But don't rush the market. Allow the market to act, then you react. Now, this is a trend line. Okay, if the market is going like this now, all right, you have to use your trend line tools. I will still show you all the tools you need in order to trade the financial market. I will show you what is a trend line and Fibonacci retracement. So many tools that you can use to trade the financial market. But what I don't normally use are indicators. I don't really like indicators. I'm a pure price action trader. You understand? When you talk about price action, I will tell you what price action is. But I don't trade with indicators. I use only my tools to trade the financial market and try to know what the candlestick is saying. So now, once the market is going in an uptrend or downtrend, try and use your trend line tools, put it from the bottom and connect the trend line. So the trend line means that the market is trending up. You connect all these drops, all these touches. You connect it. Once it can touch like 2 or 3 places where the market drop, just put the trend line. Once market comes to touch that trend line, you watch out for the reaction of the candlestick. That's what I'm telling you about this. That's what I meant when I say price action. You watch out for what the price is trying to do. Monitor your candlestick. What is happening? What is the candlestick doing? Once you see anything like bullish engulfing or rejection, maybe you see a candlestick, a red candlestick like this. Let me just change the color for you to know that I'm talking about red. Okay, you see a red candlestick, very big red candlestick coming like this, and all of a sudden it have a very long wick. This long wick is called rejection, and it's rejected. And the next one is bullish engulfing. This one covers this candle. You see where this candle stop, and this bullish candle covers it. Once it covers it, it means that yes, the buyers have stepped in. So it means that this trend line is still active. It has not broken. You enter the market and ride it up and make your money. Once you enter the market, you have to put your stop loss below the wick of that candle that rejected, so that even if the market have to reverse, once it gets here, you are no longer interested in that market. Let the market kick you out. So you have to be calculative in terms of your risk management and everything. Okay. So most of the time, the way I trade, okay, let me show you a little secret about how I trade my own financial market. The way I trade, most of the time, if the market is going up, okay, if the market is going up like this, okay, all right. You know, when I was telling you that once once resistance is broken, it becomes support, and once support is broken, it becomes resistance. Now, all this place you are seeing, this place is support. So as price comes here, it cannot break it. It goes up. This place here is support. Once it's broken, it comes here and bounce up. This place is support. Once it's broken, it comes here and bounce up. This place is also support. So as price is here now, you look for any reversal pattern of candlestick. Once it gives you those reversal pattern, you enter the market for it to go up again, for it to give you another higher high. So this is typical example of an uptrend. Then for me myself, most of the time I put my trend line. Okay, I put my trend line. I combine. This is what they call coming together of confluences. Okay, number one, the reason why I know that market will reverse from here is because this place is a support. It was a resistance turn support. Okay, now I know the market will reverse from here. Another reason is that there's a trend line here. Okay. Then another reason might be that a Fibonacci retracement is 50% here, because once you put Fibonacci from the recent low to the recent high, you map out the 50%. I always use 50% or 0.5% or 0.6. That's what I always use to trade the financial market. So you see that almost three confluences are here. Okay. Once you get your three confluences or two confluences, it means that the possibility of the market reversing from here is very strong. So once you see any sign that the market is about to reverse, you enter the market and ride it up. So you have to combine so many tools for you to trade the financial market. But what I don't do is indicators. I used to use indicators, but they always deceive me in the financial market. So now I'm a pure price action trader. Pure price action. So what you look out for is what the market is doing. You trade what you see, not what you think. Always. You have to focus on that. All right. So I'm gonna stop here. Next one, I will just dive into the chart for us to look at the chart and going, because now this is just textbook example. All right, this is not real chart. When you get into the chart, it will be more confusing, but I will guide you through. All right, we must make money in 2024. Don't worry. So if you have any question about this, don't hesitate to drop your question in the chat box. Any moment I drop any video and you have any question, the chat box is always there for you, and I must always make sure that I respond to you as soon as possible. Let's go there.